Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Wednesday, March 19th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Quickly here, overnight markets had May corn down a penny at 457 3/4. May soybeans down 2 1/4 at 10.10 1/2. And May Chicago wheat was down a penny and a quarter at 563 3/4. No export sales announcements here this morning, so we'll jump right in. I guess news yesterday afternoon on the ECAP payments that will start to be distributed, the first $10 billion of economic aid to farmers. I know a lot of details coming out this morning. Reading through it, it looks like you're going to get about 85% right off the bat. And then on the back end, if the funds are still around, they're going to clean up that last portion to people that are early adopters and get in there quick. So I would get with FSA, your local FSA here today, and I know they've got an online portal as well. So go ahead and look at that so you can get that information taken care of. Outside of that, another Fed announcement here today as well. The markets are looking for unchanged in terms of a rate decision. So we'll be watching that here shortly before the green markets close. And private estimates, I guess it's a race to write down big corn acres here. S&P yesterday increased their forecast on planted corn acres. They're at 94.3 now. So with that, guys, we'll kick it off. I know not a whole lot of fresh news on the tariff front, kind of waiting till that April 2nd time period to see what's going to happen there. So Dustin, maybe a few thoughts to kick us off this morning, and then we'll throw it around the room.
Yeah, thanks, Dan. Yeah, it's been kind of weak here for the front end of the market for corn. We've started to see a little bit more bear spreading again, and what's the reason for that? Is it kind of cleanup of bushels before loan renewal? Is it because we had a break, so there's more selling? It's a good question. One thing I think is interesting is bean basis has been, kind of rough, and we had a fairly weak crush number, right? NOPA crush number was well below expectations. We've seen a rise in the real and a fall in the flat price. But really it's not been led by the front end. I mean, we're still at 11 over July-Nov. And this is we're talking about potential trade war with China, and we're talking about a 380 million bushel carryout, huge South American production, that should be in direct competition with the July contract. So why is July-Nov 11 over is kind of a good question, I think, for what is that? What's the market saying there exactly? It still seems like a big premium to me. Justin, thoughts on July-Nov?
No, I mean, I agree with Dustin. It seems to always kind of hold a premium until the end for whatever reason. If there's just enough subscribers to bull spreading as a way to be long, or just where, money flows. But I agree. I mean, that should be probably a decent carry once you get there. If we're going to have, 350 million bushels or more, and it looks like it's probably going higher from here. And to Dustin's point with the real going up, it should be supporting the back end of the market. So yeah, but that's about it. It's one of those widow maker trades though. It's kind of like trading wheat. Like you can make 30 cents in it or lose $1 just because that's how it trades. So maybe there's just not enough subscribers to it either, to be bear spread. That could be it, right? Yeah, it's like one small thing where, the March 1st number is off. It's like, what's the risk reward of trying to short that thing, to your point? It's a widowmaker. How many times in our career have we expected a 400 million bushel carryout and we're at like 200? Right.
Right. So, and yeah, I don't disagree with that at all.
Yeah. And like, it's, it's one of those things too, like you get a strike or, down in Argentina, like you get those kind of things that happen and you're immediately down 20 cents. Even if it ends up going back the other way, it's just it's kind of like there used to be a lot of traders that would, take deliveries of a commodity, right? If the spreads got too wide, they'd, I was one of them, right? Would try to make the interest on it, and it was kind of a cheap play. But it became so burdensome with, dealing with the FCMs, dealing with, taxes, that it kind of disincentivized people to even make that trade. So I think that's kind of, I put that in the same ballpark as this, where it's more frustrating to do it than not. So.
Right. I would just think that would be the one thing really ripe is like, if we did have 170 million metric ton soybean crop out of Brazil, like, and we're talking about near 400 million bushel carry out in the U.S. The stock price is weak, and volatility I think is fairly low for beans, and it seems to be kind of like no hope for beans. Like that seems to be the attitude right now. Yet, huge inversions on the spread, old to new.
Mm-hmm.
So, just talking about the report, March 31st, it's not just planting intentions, it's quarterly stocks. So we can get a couple of surprises. We definitely chalk this up to either one of the most important reports of the year, if not the most important report. Especially in a year like this, where you have such a question about, there's a clear incentive to go corn on the ratio and the insurance price going into it. But you also have really high cost production this year, which may lead some acres to stay towards beans just to have less dollars in the pot. And so I think the chances for a wide range of estimates, and then some side of those estimates being disappointed with whatever that outcome is, whether it's really high corn acres or not enough corn acres, right? So I think it could be a little bit more volatile report, and you throw the stocks number in there as well too. After the Jan reports, we were surprised by a huge drop in yield estimates. If stocks come in and surprise higher, that's a risk, for corn, especially when the corn market's inverted right now.
Well, Jason and I were talking about this yesterday, and if you read all the commentary the last couple of weeks, it was that old crop corn prices will stay supported. The market will be led down by new crop because of all these acres, and it's been the opposite.
Mm-hmm.
So I agree with you. I think you have to be open-minded here. I'm trying to be really disciplined on where we talked about this a lot, where crop insurance kicks in, where all, just like be patient right here, because like to not have a trade on is a trade, right? And I think that's important. As you look at these markets, like if there's not something to do here, don't do it. I don't think you have to draw a line in the sand on March 19th and say I have to be bullish or I have to be bearish. I think you have to see what unfolds here.
Well, one great thing about like 95% insurance policies, for example, is like if you would just assume standard county yields like right at their projections, and you bought an ECO policy, then if that were the case, then those 95% policies trigger right around 447 for corn and around 1003 for beans. We're not too far away from those prices right now. We also have Farm Bill, which is very strong this year. Farm Bill for beans, our county, at projected county yields with a marketing year average triggers around in the 1040s. And for corn, whether it's PLC or our county, triggers in like the 420s to 430 area, again, depending on county yields. So you can't really count on that all the way, but there's some sort of safety nets here for growers.
And direct payments, and like that does, filter into the attitudes on marketing.
Exactly, for sure. And of course, we're going to need all these things, right? If we settle at $3.50 corn and $9 beans at the end of this year, we're going to need these. So you can't like necessarily, not have them. But you can maybe just shuffle around how you market a little bit more lightly on this, and you can choose, which one to go more aggressively on, corn or soybeans, and kind of set some parameters with those things in mind. I just think, if we are if we have incentivized a ton of corn on corn acres, which I've heard anecdotally from a lot of people, what does that mean for DEES-25 corn? What does that mean for DEES-26 corn? Right, that could maybe explain why the spreads were so weak in 2023. We had so many acres of corn that naturally they wanted to go to beans in 24. The DEES-23, DEES-24 spread got really wide at the end of the year, maybe in part because of that. What happens to bean acres though? If beans are only 83 million acres, look at the Feb outlook for them. We're talking about a low 300s carryout at an 84 million number. So you take that down to 83, and now we're talking about fairly tight carryout projections at a 52.5 trendline yield, which has been a struggle to get to the last 3 years. So it could also be the opposite, where people have gotten so down on beans for new crop, and we talked about the July-Nov spread being inverted. Maybe it's new crop beans that are surprising us too. I mean, there's so many different things I could be convinced of going into the report.
Yeah.
So
that's why you got to be open-minded. Yeah. And like also cost structure, working capital issues in the, industry. We've heard tons of reports of people having trouble with loans at banks. So I think to use like historical trends and just say like, they're all the same. It's not. This is a unique year too, with really sticky inflation, really expensive costs. I mean, their cost of production numbers in the $1,100 to $1,200 an acre range.
Yeah.
I mean, it's crazy. And like to think that doesn't affect, your borrowing capacity and your decisions, I think is misinformed too.
Yeah, Justin, so, I was looking at this morning. You bring up the cost of production. I thought it was interesting in the the soybean kind of average cost of production right now is between 760 and 800. That was like corn production numbers 15, 20 years ago.
Yeah, when we got all those big corn acres, that was the 800 was kind of your number.
Right. So, that's pretty eye-opening. Justin, I mean, what, can the market, we've talked about, you've said it a number of times and stuff, but like, at 96 million or, let's say 95 to 96 million or some kind of number like that, you're starting to kind of lose your argument of 180 plus bushel national yield too, right? So, I mean, I think you have to make some assumptions on your balance sheet that, maybe guys aren't factoring in.
Yeah, I just think it's going to be really tough to get 96. I think that's going to be really, really tough. I think the market's kind of selling around 94, 95. I think that's what we're trading right now. I think 95 could be tough. We'll see. I personally think I think it's easy to say, the ratio didn't get crazy low. Like it's not a no-brainer to plant corn. And, I think it's going to be interesting to see how much money do you want to spend on a crop that you're losing money on? Just so I'm kind of in the 94 less camp personally, but we'll see. I'm trying to be open-minded, like I said, because anything's possible. Maybe the ECO, I think that the really question is going to be, did the 65% subsidy on ECO and where Farm Bill stuff kicks in incentivize enough corn acres? Because that is a new factor that I haven't experienced or we haven't experienced yet. That would be the one thing that could have switched more acres than we think, is that you could just insure so many dollars with ECO 95%. And that's going to be the question, I think.
Yeah. And I'm just playing devil's advocate, Justin. If had they released this ECAP payment prior to your crop insurance decision, that could have been a huge factor as well, because I mean, there was still a number of people that were out of their comfort zone to spend extra money on crop insurance.
Yeah. No, it's again, a lot of factors here, I mean, we obviously pushed really hard for these premium things, I think people that really put pen to paper and figure out like it is expensive, but you don't have to pay for it until August or later, and the value that you get from it, I think are going to go with it, and it's really like, to me, it's like, do you want to sell corn at a level that's, below break even, or do you want to pay for a subsidized government put that allows you not to, affords you not to have to sell today? So I think it's going to be a big subscription. I think, Dustin, what was the numbers like? Pre this 65%, like 5%, 2.5%,
2.5%, like 5% if you include some MP in there too. I think is the max you generally get to in some of these states. But yeah, it's very low subscription until now. To see it at 20% would be
right. 10x, right?
great.
Like, I mean, 5 to 10x. So I mean, that's a big difference on number of acres that have a premium policy. So that is meaningful, and it's probably going to be the I states, right? The real big corn yield areas that take it, I would think too. So how does that change people's opinions on marketing and acres? And I think that's a question hopefully we'll have answered on the report. But
well, I just anecdotally again, so I take it for a grain of salt, but I've seen a lot more appeal towards corn and corn than I expected to see this year.
do you think it's because of what they could insure?
Insurance. Yeah, I mean, it could be from that. But it maybe some confidence that they can grow good
Yields,
corn and corn.
Previous yields.
Or like, 2018 came around and like we were seeing 90 bushel averages in Illinois, right, for beans. And it was like, and then there's tremendous confidence just kind of go into rotation. It's almost like the easy low hanging fruit of coming out of years of corn and corn rotation into strong bean yields. It's almost like that's kind of backed away a little bit. I don't know. That's just my little feeling about this. Is that I just wouldn't be surprised, I guess, to see in a survey, prior to any sort of like real, bank discussions about what you can actually afford to plant. I think everyone was pretty strongly considering corn and corn during the survey timeframe. So I just wouldn't be surprised to see it a little bit higher than 94. Again, I'm not predicting that. I just wouldn't be surprised to see it.
There you go. This is why this
is my favorite time of year.
Right. Yeah.
There's going to be so much going back and forth. Like I said, there's going to be a race on the estimates to who can write down a bigger number here. So that'll be intriguing to see, but we'll find out.
Well, the best part about it is someone's going to be disappointed no matter what.
Right.
That's the best part. Right.
Yeah.
So, yeah.
It's like golf. Somebody's disappointed. Somebody's a winner.
It's always me though.
All right, Ryland, real quick. It was pretty quiet in cattle yesterday, but we got weather coming, so that's been a little discussion here this morning. And then hogs pretty choppy. So what do you got for us here today?
Yeah, I mean, everything was a little bit on the weaker side to start yesterday, but kind of climbed back. Cash trade really hasn't poked its head out of the water yet. We've seen some asking prices start to surface in the south around 205, but generally speaking, the expectation is still really high. We got new highs in feeder cattle again, new contract highs, the index, new highs at 284.11. I mean, so it just feels like there really isn't a lack of buying and a mad dash, I think, for the shorts to kind of protect some margins here, So overall, it's really good news, I think, or at least optimistic from what we're seeing, and especially just ahead of Friday's cattle on feed report. On feed, March 1 is expected at 98.3. Placements on the low side at 85.4, likely because there was one less business day this year than last. And marketing's at 92. So we'll see how that stacks up by the end of the week. Like I said, I think the cash trade is still leaning pretty optimistic, especially with beef prices being up yesterday. Choice up $2, select up $1.30. So really just no change there. Market's pretty tight right now, and I think where cash expectations are. But we'll see if there's any more follow through. And on the hog side, yeah, it just seems like market may have gotten a little concerned. Belly's taken a nosedive yesterday, down 10 to 88. Cash has been firm, but it really doesn't feel like it's going anywhere. So 88.28, that was up 23. So just really, we're just waiting for kind of a bigger move in cash or some little bit more optimistic view there. Otherwise, it feels like the board's just staying in that choppy kind of range for right now. And maybe there is a little bit of concern what happens in the next few weeks if there are some new tariff talks or anything like that. So it just seems like we're kind of languishing right now. So still keeping an eye on cutout, into the day.
Very good. Appreciate the update there. One thing to note, we'll have weekly export sales out tomorrow morning, 7:30. Central. We'll take a look at those and visit about that in the war room. Also, through April 1st, got a special deal for new clients coming on board with AgYield. As we come into the 31st report, give us a call. We'd love to make sure that you're properly positioned and comfortable as we go into that key report. And if you got any questions or anything related to marketing, please don't hesitate to give us a call. Jack will have more information in the outro there. As always, we appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we'll talk to you again tomorrow.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.